the area where we're most focused, and that is, when you look at suburbanization, it's very good for our grocery-anchored shopping centers.
I'm here today with Jeff Edison, Chairman and CEO of Phillips Edison and Company. What are some headwinds and tailwinds you're seeing as you head into 2023?
Well, as I think we all know, it is a kind of a tumultuous time, and it's a time of, I think, a fair amount of uncertainty, and it's complex because we're in about as good of an operating environment as we've ever been. And we're at record levels in terms of our occupancy, our retention rates, our rental spreads. So the operating side is going really, really well. But there's clouds on the horizon, and we're kind of looking at those and what's going to happen in 23. And today the primary headwind is really the inflation and what it's doing to the interest rates, and so we keep a close eye on that. The bigger tailwinds for us are like what are driving these strong operating results, and I think that is probably the area where we're most focused, and that is when you look at suburbanization, it's very good for our grocery-anchored shopping centers. If you look at sort of the market's view of being in the suburbs by the retailers, that's really growing, and we're seeing high increased levels in terms of interest from the retailers in our suburban locations, and so that I think are the things that are driving the really strong operating results. But there's a lot to it. I mean, whether it's work from home, whether it's the growth in the Sun Belt, all of those things are creating additional strength in the quality of our centers.
And where do you see growth coming from in the next year?
There are really two places. We anticipate that these strong tailwinds that we were talking about will continue, and that we'll see good growth, internal growth from our rents, and that'll be a big driver. We also think that there are going to be some opportunities for external growth. We're in a transition time right now on the acquisition side, so we're not certain how that will evolve, but we've certainly moved from what was primarily a seller's market into much more of a buyer's market as we have today. And as that transition works its way through next year, we think there are going to be some really good growth opportunities externally to buy shopping centers.
Phillips Edison celebrated its 30th anniversary during the pandemic. Reflecting on 30 years, what are the biggest lessons the company has learned?
I think the biggest lessons we've learned is that when you have a strategy that is different than everyone else's strategy, which is right-sized grocery-anchored shopping centers, if you can keep focused on that and you can continue to improve in every part of our business, whether it's the marketing side, whether it's the accounting side, whether it's the leasing side, whether it's the development side, if you can become true experts and every day get better at it, you can do well over a long period of time. And that's how we sort of built the business around that, starting 30 years ago, and we've continued to focus on that and refine and get better, and make mistakes and learn from our mistakes and continuously kind of learn as you go. That's been what's worked for us, and we hope it'll work for another 30 years.